What is up, guys? So I found this article today on CNN Business, and this one hits very close to home. As you guys know, I am originally from Italy. Both my parents were born and raised in Napoli, and I have tons of family just scattered all throughout the country, north, the south, all over Italy. And so obviously my family here is very worried about what's going on in the lockdown. So earlier today, my mother and I called one of my aunts that lives up north in a small town in a very prominent area for the coronavirus. I mean, it's about 150 miles away from where the first case was reported or diagnosed. So it's very scary. And we kind of wanted to talk to her and see what it was like with the lockdown, And this, keep in mind, this is a small town. Like I said, it's about maybe, 30, 40,000 people. So small. But we wanted to know, like, how strict they're being, what's going on. And basically she said they're allowed to leave the house, but there's no reason to leave the house. Everything's closed. So the bars are closed, movie theaters, schools, everything's closed. And then the grocery store is closed really early. And, the Italian government just doesn't want people congregating. They don't want a lot of people in the streets. They don't want people getting close to each other. They put like a 3-foot rule when you're speaking with other people. So, and she said it's a ghost town. I mean, 5 o'clock, there's nobody on the streets. And for any of you that have been to Europe, that is got to be a really ominous thing to see, because usually, especially in the small towns of Europe, everything's accessible by foot. I mean, you could go to the doctor, the grocery store, everything. I mean, the streets are usually teeming with people. There's a lot of movement. There's a lot of commotion going on. People just all over the streets. It's usually what's going on in those peak hours. So it's got to be really ominous to see nobody in the streets and during those peak hours. So, she basically said that it's not as strict as the media is portraying it. I mean, we figured, right? And it's the media. That's what they're going to do. So no surprise there. Now, I'm sure if you go to Torino or Milan or Rome or Napoli, any of those major cities, I'm positive that they are policing the streets, and they got the military policing the streets, and they are way more strict about the lockdown. There's probably some sort of curfew in place. I'm sure it's way different in the major cities, especially since, they don't want big groups of people. So they got to keep that under control in those major cities. So I'm positive that they are, under a more severe lockdown than my aunt up north in that small town. So this is a very interesting article. I kind of skimmed it. I wanted to make sure that it was a thought-provoking article. And I'm also going to feed that. I'm going to give you guys some more things to think about. I want to make this a very thought-provoking video. So along with this article, I think a lot of you guys are going to enjoy this. And there's a lot of implications that are kind of, cool to think about. Let's put it that way, I guess, in this article as well. So, and I also want to talk about the stock market and the gold and silver prices. Now, as you know, this is basically a pandemic that we have going on. I mean, the atmosphere is there. The fear in the market is obviously there. I mean, just look at what's going on in the markets the last 2 weeks. The fear is there. All the elements that usually make gold and silver just thrive and start gaining and growing and, crazy boom. That whole effect is not happening right now, right? I'm sure you guys have noticed. We have a GSR ratio of 100-to-1 right now. It's crazy. So silver is really lagging gold. And gold, I wouldn't quite say it's performed. I would say it's been consistent. That's my opinion. Gold has been consistent, not performing. And silver always lags gold. So that there's nothing out of the ordinary there. Usually when people dump and come into precious metals, they usually buy gold first. Gold is the first one. Once gold reaches a certain price and that kind of value is gone, let's say like that, and at least to the investor's eye, the value's gone, then they go into silver, and then that's what drives silver behind gold. That's usually what happens. Now, so all the elements are there. So why aren't gold and silver just booming right now? Why are they not doing what we expect during something like this? I mean, a pandemic. There's one major factor that is not happening right now. And this is from a personal perspective. This is what I think is going on just because of this is an evaluation that I did on my own here, So I had sold my stocks, all of them, right? And once I heard this and that and the Dow is losing hundreds of points, I'm like, okay, too much going on. Let me get out. Let me wait, and I'm going to get back in. So right now, I'm sure there's a lot of investors doing exactly that. There's money that it's just stagnant. Guys are waiting out the storm. They are waiting to go back into the market. Kind of what I'm doing. Same thing. If you look at Apple, if you look at Microsoft, you look at any blue chip stock, they are on sale right now. And I'm positive, there's investors salivating watching those prices. Today there was a little bit of a recovery, but I think tomorrow we're going to go right back into it. It's going to continue to go down. I think it's going to keep going for a little while. Eventually, the market's going to hit some sort of floor, and there's money to be made. Whenever there's such a huge drop-off, there's money to be made. And I think a lot of guys are eyeing these blue chip stocks the way I'm eyeing these blue chip stocks. And I think that's why gold and silver is just not happening right now. Instead of them selling their stocks and buying gold and silver, they're kind of leaving their money stagnant and seeing what happens over the next, who knows, a couple months or so, whatever the case may be. But I think that's what's happening. So that's a major factor. If they don't come in to gold and silver, they're not buying it, it's not going to drive the price. And I think what's keeping gold kind of consistent is you might have a select few that are like, I'm not dealing with this market. I'm going to the safe haven. I'm going to gold. That's what I think is happening right now. So it's going to be a buyer's market very soon. Right now, everybody is selling all their assets. It's a seller's market. Everybody's selling everything. Nobody's buying anything at the moment. But like I said, once those stocks hit the floor, these investors are going to come right back in and drive the market again. However, and this is why I like this article. Read this article. I'm going to read it, and you're going to see why there's a couple contradictions to actually everything I just said. So that's why I like this whole article, and it's very thought-provoking. So that's one factor, and I think another factor of why gold and silver just aren't performing right now, even though all the elements are there, is I think a lot of people just don't take the coronavirus that serious. I think they've mentioned that they have a vaccine, or they're going to be working on a vaccine. It's going to be out within the next month or two. Once that vaccine's out, it's free game. It's just going to, you know what I mean? That's it. Once the vaccine's there, all the fears kind of eased a bit and the market's going to recover. So I think that's what the mindset is of a lot of other investors that are not fully into what the media is pushing out, and they're just not buying the coronavirus at the moment. But like I said, there's a lot of residual effects that are going to happen. Even though it may not be serious or they don't see it as serious, there's going to be residual damage from this whole ordeal. And if you just read the title of this article, Italy just locked down, the world's 8th biggest economy, a deep recession looms. That spells it out. Anytime you're talking about any of the top 20 countries going into some sort of recession, and now we're talking top 10 countries going into some sort of recession, that is going to echo worldwide. Trust me. So we're going to have to see what happens. But anyways, so that's the title of this article. This was written by Hannah Ziadi of CNN Business. So I'm going to read it, and I'm going to throw in my 2 cents where possible. So Italy has imposed sweeping nationwide restrictions on travel and public life, a desperate attempt to contain the coronavirus outbreak that looks set to plunge the world's 8th largest economy into a steep recession. The measures announced last Monday include travel restrictions on 60 million residents, a ban on public events, the closure of schools, movie theaters, museums, and gyms, and limits on opening hours for restaurants, bars, and shops. The government took action as the number of deaths caused by coronavirus reached 463 and infections topped 9,000, more than double the number reported in China as a share of the population. The restrictions are in place until at least April 3rd. So that's quite a while. Taken together, the unprecedented measures are likely to push an economy that contracted in the final 3 months of 2019 into a sharper downturn that will put Italian hotel, travel companies, and restaurants under intense pressure. So yeah, obviously Italy is a huge tourist country, so just imagine how much they're going to be losing just from that, just from the tourism loss. Jack Allen Reynolds, senior Europe economist at Capital Economics, said Italy's economy will contract sharply in the first half of the year, even if the restrictions are lifted at the end of April, with GDP declining about 2% for all of 2020. So a lot of guys in this community, along with me, I'm one of them, have said that 2020 is going to be a big year for precious metals. And everything that's going on is just making it more likely that it's going to be a big year for gold and silver this year. This, like I said, this is all going to have residual effects. So the hit to GDP will be much bigger if the restrictions are extended until the end of June, he added. This does not take account of the impact of the banking sector, the spillovers from the impact of the virus on other parts of the Eurozone, or the potential supply chain disruption if the virus really takes off in Germany and other key trade partners, he added. Economists at Goldman Sachs expect the restrictions to shave 1.5% points off Italian economic growth in both the first and second quarter of the year, followed by a pickup during the second half. Although fiscal policy will limit some of this drag, the virus outbreak is very likely to push Italy into recession, they said in a research note on Monday. The sectors most affected by the lockdown, including transport, art and entertainment, retail, and hotels and restaurants, account for around 23% of Italian GDP, according to Goldman Sachs. 23%. Wow. Major Italian companies are working to comply with the new limits. Fiat Chrysler said it's taking action in all areas of its Italian operations to maintain business continuity. This includes screening visitors to its facilities, suspending non-essential travel, facilitating remote working, and minimizing interpersonal contact. Currently, the group's Italian plants and key functions are continuing to operate as planned, it said in a statement. Supermarket chain Esselunga said it is implementing social distancing in stores in accordance with government rules requiring that shoppers and restaurant patrons remain at least 3 feet apart. Containment efforts are likely to plunge the restaurant and tourism sectors into crisis, said Stefano Manzucci, chief economist at Italian trade association Confindustria. The manufacturing sector could also be harmed because foreign tourists drive demand for made-in-Italy goods, he added. And one of those is actually gold. So, interesting. Limitations in movements and the fear about what is going to happen are likely to bring about a contraction in consumption, which is probably already strongly underway, said Manzucci. Italy's tourism sector, which accounts for 6% of GDP, will be particularly hit hard as popular destinations in Venice and Rome are deserted. On Tuesday, the Vatican closed St. Peter's Square and St. Peter's Basilica to tourists. Italy's government is expected to unveil a range of emergency measures to offset some of the economic shock caused by the lockdown. The country's economic ministry said Tuesday that the mortgage payments would be suspended. For example, the measure is being implemented in collaboration with banks, said a spokesperson for the ministry. Italy's central bank said it is working closely with the government to define appropriate measures aimed at supporting firms hit by the economic fallout of the outbreak. Menzucci expects to see wider suspensions in debt repayments, liquidity support for Italian companies, subsidies for temporary unemployment workers, and eventually a public infrastructure investment plan. Given the scale of the disruption that all of this will cause, we suspect that the government will eventually provide fiscal support worth several percent of GDP, Alan Reynolds of Capital Economics said. This wouldn't do much to raise aggregate demand while the quarantine is in place, but it would help to maintain spending on essential items, prevent borrowers from defaulting on their loans, and provide a grace period for some tax payments, he added. But these measures will only partially offset the hit to the economy and will not be enough to counter the blow to tourism, much of which is not recoverable as carnivals, trade fairs, and events that are canceled, said Paolo Pizzoli, senior economist at Dutch bank ING. Italy's stock market reflected the pessimisms, plunging further into a bear market on Tuesday. The benchmark FTSE/MIB index has now fallen by nearly 30% since February 19th. And this is the part I was talking about where it's kind of going to echo across the world. This is another kind of breakdown of that. The country's containment measures are expected to ripple throughout Europe as the movement of Italian travelers is curbed and manufacturing potentially disrupted. The region was already smarting from China's coronavirus shutdown, which hit demand for European goods and disrupted manufacturing supply chains. Measures taken by other European governments to contain the spread of the virus, which as cancellations of public gatherings and sporting events, are expected to dent growth further. So yeah, I watch a lot of Italian soccer, and they just recently played a huge game, and it was empty. Nobody in the stands, completely empty. Now they just suspended them. They're not even doing them anymore until sometime in April, probably till after the lockdown is done. Researchers at Barclays expect the euro area to experience a short-lived but relatively deep recession in the first half of this year. They expect growth from the full year to come in at 0.3% versus the 1% rate expected before the start of the outbreak in China. The northern part of Italy, where the coronavirus outbreak is worse, accounts for roughly 75% of the country's trade with the other EU countries, according to Goldman Sachs. The supply chains of the Italian and German automakers are especially well integrated. This is going to be a European problem, Menzucci said. Ian McSweeney, Valentina Donato, and Emma Reynolds contributed reporting. All right, so there you go. So very interesting article, and like I said, there's a lot of implications about Italy's economy, and that's going to affect the world economy. Obviously, like I said, you're dealing with one of the top 10 economies in the world. It's just it's a matter of time. So let me know what you guys think down below, and make sure you comment, like the video, subscribe if you haven't. Thank you so much for hanging around while I read this long article. And any prayers, thoughts and prayers to my family in Italy will be greatly appreciated, as always. So, all right, guys, thank you guys so much, and I will talk to you guys later.